Hey, welcome back to The Dive. Today on the show, we have Michael Dehn joining us to talk about the US CPI number and what it means for gold, lithium and the energy sector, China's ban on germanium and gallium exports, and what it could mean for the Western world. And he's also going to fill us in on some of his favorite projects that he's been working on lately. Hey, Michael, welcome back to The Dive. Thank you so much for joining us today.
Good to see you again, Cassandra.
Yeah, nice to see you too. And I hear congratulations are in order. You're now the mayor of Erin, Ontario.
That's correct. Yeah, just back in November.
Oh, so cool. Well, congratulations. Okay, so Michael, let's start off with the US CPI since all eyes are on it right now. It came in at 3% in June, the lowest since March of 2021, while core CPI came in at 4.8%, the lowest since October of 2021. Do you think that if the Fed pauses, it will cause a breakout in gold?
Yeah, I don't really see the inflation and price concerns really affecting gold as much as how well the US dollar is reacting against other currencies. So when we see strength in the US dollar, we see weakness in the price of gold. When we see weakness in the US dollar, we see strength in the price of gold. And I think this is the way it's been going for the last 20 years. So we can talk about all these other indicators, but really it's what is the US dollar doing versus all the other currencies that's really driving the price of gold.
What price level do you think that gold needs to get to in order for producers to increase production?
Yeah, in US dollar terms, I'd say 2000 is a nice point. But depending again on where you are in the world, some currencies are so undervalued relative to the US dollar that they make such a great margin selling in US dollars that they have incentive today to do it. So it really depends on where you're located. I think American producers and maybe Canadian producers are not really in a hurry to increase production, but South Africa, parts of Northern South America, there's probably a lot of incentive for them to increase production today.
Okay, so let's move on and talk about lithium. According to Forbes, lithium and gold were the only positive performing commodities in the first half of 2023. What is your read on the lithium market right now?
Yeah, I think we're in a raw material supply shortage still. We have a lot of excess capacity coming on the chemical and battery manufacturing to try to meet the demand for vehicle batteries, but we have not increased raw material supply. And we're counting on a lot of production coming from new types of lithium deposits, which do not have completed, permitted, fully operational new technology. So you have stuff that's working at a bench scale, but a lot of these new technologies have never worked at a commercial scale at large tonnage, large volume, continuous operations. So I'm sticking right now with South American brines and Australian and North American pegmatites as my favorites to go to. It's not if I look at technology is really the support that the raw material industry needs and everyone's counting on, but I haven't seen a guarantee that it's going to work. So we are probably still going to be in a deficit for another decade.
Now, it's being said that lithium is the only sector seeing major interest right now in the junior markets. Since we know you've worked in the Canadian junior lithium market for over a decade, what type of companies do you think have a shot of getting to production?
I think the ones that have good infrastructure that are already close to existing employment areas, to industrial lands, close to ports, close to transportation, they have a better shot than the ones that are more remote. And I think you have to look at not just size, but grade. So you can have a smaller deposit that's higher grade, and it can be very attractive in this market versus just having a gigantic deposit that might be lower grade. So, big deposits with decent grade and small deposits with high grade are where I'd like to, put my money.
So investors in the energy sector widely agree that the energy transition is real and it's already in progress. However, we're seeing underinvestment in the mining and processing of critical elements. How do you think that underinvestment in critical elements affect the timing and the cost of the energy transition?
Well, right now, I guess there's the supply and demand drive the costs up since you have a low supply and high demand, especially in lithium, graphite, cobalt. That those and nickel, they're pushing those commodities higher. It'll probably also delay a lot of the energy transition. I'd say probably in North America And are we going to see a real energy transition in Africa? I don't even think it's practical right now to be looking at EV charging stations across Africa when you have a grid system that's not really up to snuff. But in the US, certain places like California, I think they'll do quite well in the transition. But if you're going to Colorado, is it practical to go to an EV if you're driving through the Rocky Mountains and trying to charge every time you go 400 miles? It might not be the right place to do a transition. You have to look more at the urban areas, East Coast, where the cities are closer together. The Midwest of the US and Western Canada, is it as practical? Probably not. But Southern Ontario, you're around Toronto or around Montreal, you can see these hubs of it. But as a national policy, it might be a tougher thing to implement and too costly to really be practical.
Now, most automakers claim that they're going to be all in on electric vehicles by 2035. Do you think it's realistic given where we're at in the supply chain investment cycle?
Well, I think it is for certain companies and certain places. I mean, Norway, I think, is going to be totally electric before anyone else, and they have the funds to do it, and they have the energy to do it. So it makes a lot of sense there. They can put in the infrastructure for charging stations. But there's other vehicle companies that are looking at hydrogen as being the alternative and not focusing on electric vehicles. So they're going green, but they're not going EV. So they won't have the same competition for the critical minerals that the EVs have. And if we see that, there could be this good sort of split that there's a bit of competition between different competing green energies. And hydrogen, in a sense, makes a little more sense for somewhere like the US or Canada, where you have wide distances between large cities, that refilling a tank makes a lot quicker than recharging a battery. So I'm kind of hoping both technologies come forward strongly. And I don't know if the EV transition is going to become an EV and a hydrogen transition in the near future.
Now, China recently banned the export of germanium and gallium to preserve security and national interests. Do you think that this will be a challenge for the Western world to mitigate?
Yeah, I mean, especially for gallium, maybe not as much, but germanium is a strategic mineral for electronics and military applications. So I think the US and maybe the European allies will look quickly to find a new source for germanium and keep that supply chain running. It can be a byproduct from certain zinc deposits. So you might be going back to tailings deposits from 20 years ago and looking what you can clean up and recover. That might be the quick solution. Long-term solution is you got to find some new deposits that have enrichment in germanium, and indium is another element that occurs with it. So if we can get those coming out of the ground faster in the next 5 years, we can probably start mitigating it. But near term, you kind of have to look at tailings or recycling as the source for germanium and indium and gallium.
Okay, so Michael, one last question for you. What projects are you working on these days?
So I'm consulting still with United Lithium, where I was CEO until earlier this year, and we're drilling in Sweden, working in Finland, where we had a drill program earlier this year, and we're now doing some mapping. Have field crews in South Dakota and in Colorado, and likely have crews in Wyoming later this year too. So US hard rock pegmatites and European hard rock pegmatites.
Okay, yeah, lots going on. And the mayor. All right, well, we'll let you go since it sounds like you're very busy, but thank you so much for coming on today and updating us.
Thanks so much, and good catching up with you again.
You too. To our audience at home, thank you so much for tuning in today. If you enjoy this kind of content, be sure to hit that subscribe button below me there before you leave. Bye.